Hey, good morning, everybody, and welcome to the morning volatility report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, daily chat room moderator, all kinds of stuff. A blog yesterday on Draghi, looking at TLT, and also, once again, another FOMC meeting, an ECB announcement yesterday. The way I kind of dissected that, I basically got he wasn't really going to do anything new. He always said he'll do something, but now he's like, well, he kind of gave a date. Sneaky, right? Well, we might do something past March 2017, which, if I'm trying to divine central bankese talk, that means, well, I don't want to do anything past that. And I think so far, European equities were down, and treasuries are down. So anyway, yesterday I was noticing the drop. Put this in the blog about an out of the money time spread like we talked about in the gold class, but of course, execution today is going to be a little tougher, but we might get better prices for it. We'll just have to go a little farther south. So that's something we'll look at today. But with this also are banks. Bank America up 24 cents. Goldman Sachs, well, it's down 7, but it's relative, holding up. I saw JPM up a little bit. Okay, holding up again. Everything else, though, not holding up. And what's really happening with VIX today, we're getting a little move. Okay. Volatility is up a little bit. Not a ton. Also, I'm just hearing about Deutsche Bank as well. So, right, it's maybe the beginning of the end of kind of the rate sadness. Now, the rest of the market doesn't like it, but the banks do, right? And I think we put out a couple times. I like the idea of banks for the end of the year and beyond, and even just to simply just XLF. But as far as vol goes, we're getting a vol pop because the market's finally moved about 1%. Nothing. Volatility should go up when the market drops. I have SPY down almost 2 handles at this point. So what are we going to get from this? Tough to say at this point. What's been happening is the market's been selling off, and then they've been buying it back in the afternoon. I don't know why this would be any different, but ultimately, at some point, there was going to be a turn in the, basically the sentiment of the rates. The Fed has been sort of waiting all year. I think you got a second piece. Somehow, I think all the central bankers have gotten together and say, well, we're going to try to get out of all this monetary crap over the next 2 years. Maybe this is the next piece. This possibly opens the door for September, although it's, I don't think anything happens in September, but could in December. And how stocks react to it, I just don't know. Because without the monetary stimulus, I wonder if we kind of have the continued rally. So trade-wise, again, I like the idea of long banks. Overall, still, I think you use XLF as a hedge. I think that's a good idea. We'll look at a vol strangle today because ultimately we have had this time and again over the last, let's see here, let's do a T-chart. Let's do, that's 5-day, right? Let's look at our daily. Okay. We're still not at anywhere near some of the recent highs we had for vol into the last announcement. So I'd like to see something up there before I got excited about whatever was happening with this rally and volatility. This is totally in line with just the market finally moving down 1%. We haven't moved down 1% in, 45, 50 days, something like that. Almost, I think it's a record. So it had to stop at some point. But I don't know if there's enough here for a follow through because we're still, again, waiting for news. We kind of have this, the market gets ready to move to nowhere. But I think ultimately testing the whole concept of monetary policy kind of getting turned off, or that started being in the rearview mirror. You know, if you guys remember, we had kind of that spring wreck 3 years ago, only to recover. What was it, 2013 or 2014, when Bernanke was like, "Whoa, we're gonna slow down," but no, we're not. You could see something similar to that if there's enough perception and if there's enough belief that rates truly are going to start to slide or start to rise again, even though we're not talking about giant numbers. But for an equity market that's kind of been living on that for a while, I think that's important. So for VIX, we will look at strangle opportunities today in our chat room. We'll look at TLT, again, time spreads. I still think they're the right thing, just moving them down a little bit. Also, I'd still like to look at oil because it has been making a move. Looking at stuff like XOP, and just going to use a little pullback to possibly develop some ratio put spreads, something like that. So the big thing is that push to 2020 just is not materializing. Okay, there's no, at least for right now, there's zero catalyst to get us there. And I think the Draghi thing just said it's not a question of when rates if rates are going to rise again. Now it's sort of a when, or at least an end to some of the big central bank stimulus. And that's keeping a lid on our market till we have another reason to go higher. So it looks like the big broad market rally is at least muted for the time being. So with the vol up, that means upside flies, upside broken wing flies around the all-time highs could be a trade as well. You could use that to generate money to buy some VIX strangles or something like that. So we can take a look at that in our chat room today. But that's what we got. And we'll see ultimately if our sell-off really has some legs or not. And with that, I will see many of you in the Option Pit chat room momentarily. We'll have Mark in for the pit report at 10:45 Eastern time. All right, everybody. Have a good day.